63, 40, 63. Resistance above at 71, 83, 91, 4100, and 10. Support below at 54, 44, 36, 28, and 20. Pivot 63, support 54, 44, 36, 28, and 20. Resistance on the upside at 71, 83, 91, 4100, and 10. This is the quietest it's been in a very long time overnight. Very tight little range here. So we'll see what today brings. Market here still kind of reacting to some of the news yesterday, which was kind of positive, I guess, for the most part. And we'll see what today brings. All right. But this is the narrowest range it's been here for a while overnight as the market opens up here. All right, as we quickly come up here, rotate here off of the morning, coming up here to these interim highs here. We've got resistance around the 71 area. Again, we are scalping mini S&Ps, looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action opportunities that might occur. In combination of both of those gives us our scalping setups, in addition to price action plays, which again are created once the market paints some bars. So the combination of both of those allow us to get our opportunities. And if you look at the chat, you'll see the levels that we just gave out. Thanks, Don. Welcome back. Chad is very grateful that you're doing this because he jumps in there while you're gone and tries to help me out. All right, we're just kind of drifting back here again. We've been in a very narrow, tight range overnight, so we'll see. That probably translated to quiet trading day. Let's see if there's any news that comes out. It's coming out this morning that might affect or give us some opportunities, some trading opportunities. But we do have a couple numbers here. Consumer sentiment is coming out, as well as pending home sales. So maybe that'll give us a little jolt in the volatility. But as you can tell, once the market starts rallying, and we talked about this yesterday, the volatility gets shrunken out of the market or tightening up. And that's where we're at right now, is we're pushing the mid 4,000s coming up here to against the 4,100. The hope, because of the numbers that are not looking great, but the hope is that have a soft landing for any recession that we might get into. Technical recession, as we talked about yesterday. All right, we're coming back up here to the highs. We got a little resistance around the 71 area. Got a couple numbers coming out here at 9 o'clock. Could give us a little volatility here. Pending home sales and consumer sentiment, so maybe that'll give us a little jolt. But it is Friday, and next week, there's the backdrop of all these earnings results that are coming out, and then we do have the announcement as far as Fed is concerned, what they're going to how they're going to raise rates or how much they're going to raise rates. Always a something the market looks forward to, even though it's probably not tradable. That's another story. But point being is that the market could be just kind of waiting for that situation to develop. And then, find out where the next leg is going to go or not. The expectation is for the expectation is for 25% basis point rise. We'll see if that is where it's at or not. All right, well, we inched up there a little bit. You got up to 70 there. I don't know if you were able to get in there or not against the 71. If you did, then you get a nice little rotation here against it. So maybe you were able to, if you're scaling in. Yeah, there was a little bit of a bump in orders there at 70. So probably difficult to get into. I mean, so how do you, Chad? So how do you think you can trade that if there was saw a big order there at the entry point that you wanted to get into? I mean, you could like see if it gets up there, if it's traded or not, or then you can decide whether you want to maybe get in at 75 or not, right? Yeah, I mean, it's there. I mean, it's not a lot. 200 is not a lot, but you could have made a quick decision or just leave and see if it comes and retest it like it's doing now. We'll see what happens here if it's on the same bar. But I mean, there's different ways. I mean, you can look at the price action, decide what you want to do. You see how it's trading when it gets there. So I would probably do the upper end of the range here against the 71 if you're going to do it at all. As we come and retest it again, it did not trade 70 that much, I don't think. But again, it's a way of looking at it and looking at the price action and kind of determining how you want to manage that trade. Well, that's good. Okay, that time we did get it. And slash rotation up here, so all good. All right, nice little rotation here against 71 area. And if anybody has any questions, feel free to ask in the chat. Very no risk whatsoever on this little trade. Again, you can just have a trailing stop here with anything left over, but definitely take some profits along the way here, and you can definitely take more than 2 or 3 points on your trade if you did get in. And remember, it's an area that we're talking about. Even though we had 71, we got up to 775. So hopefully you're scaling around that area, because again, it can't be perfect. Now, once we got this rotation here, basically our level kind of worked. So now we're not looking at that level anymore. We're looking at the 83 on the upside. And if anybody has any questions, feel free to ask in the chat. Do we have a couple numbers coming out this morning that could give us some volatility? We shall see. We never know. All right, so again, we basically, our 71 got triggered with going up to 775. And now we're just gonna see our next level of resistance above is up at the 83 area. Yeah, obviously you can see here from yesterday's trade to 77. It's a little bit of could be a little bit of an opportunity. Again, sometimes when I take my levels, I take the safer end of the range instead. There are the levels in the chat for us. Let's see here. The initial estimate for the fourth quarter GDP arrived yesterday, showing the economy expanded at a 2.9% annual rate compared to the forecast of 2.6. The Fed is likely to mark the data as resilient despite the deceleration from the third quarter, giving policymakers room to start the year with a couple more rate hikes. At the same time, durable goods orders for December came in at 5.6, above the 2.5% level that they were expecting, while weekly initial claims, jobless claims hit 9-month low, going to 186,000. The stock market averages rallied on the news, while December new home sales topped estimates and added to the upbeat sentiment. That was yesterday. And that's why we rallied. Again, good news for the economy. Has not normally been a positive for the economy because of the way the Fed has been dealing with interest rates. So good news is bad news. Maybe good news will be good news. It'll be good, right? I mean, it'll be normal. Good news is good news. Bad news is bad news. But then what's good news and then what's bad news? We don't know. I don't know. I don't know how these guys look at these things sometimes. Every time I think there's a good news, it turns out to be bad news. Then sometimes the good news is good news. See where I'm going with this? See where I'm going with this? Like, don't worry about what the numbers say, because the market's going to react to it in its own way. Just trade the market price action once the levels or the numbers are released. We are definitely not smart enough or don't have the ability to move the markets like some of these people who decide, all right, the number's out, now we can either buy or sell, and then we'll give a reason for it afterwards. All right. All right. All right. So we have a couple numbers here. We got as the market here continues to uptick, like I said, a little bit around 77, 78. If you're very aggressive and you wanted another little trade there, you could trade off of yesterday's high. Consumer sentiment and pending home sales are coming out in the top of the hour, about 14 minutes. All right. Market kind of just continuing this little push here to the upside. As you can see here, it's rather tight. They don't really pop that much. Hey, Don, if you can hear me, what's the VIX trading at? I would have to say it's definitely in the 18 or less range. If anybody knows what the VIX is trading at, 18.45. Yeah, it's kind of just slowly dripping down and then sucking out volatility. All right, we swiftly come up here. Like I said, little resistance right around this little area here. If you're a little aggressive, our settlement price here is at 75.50 as well. So maybe a couple reasons if you wanted, if you were a little aggressive to trade this little level here, anywhere from here up to 77. Again, only if you're aggressive. Otherwise, look for the 83 area above. As we wait on these numbers to be released here at the top of the hour. Okay, looking for the 83 level. Okay, I'll get up there to 80. All right, getting a little bit choppy up here, as you can see. Whipping around just a little bit. Patience is important. We do have a number coming out here in about 9 minutes, so keep that in mind as we come up here to trying to. Oh, we have 83 up here, so we'll see where that goes. Again, if anybody has any questions, feel free to ask in the chat. We like to be patient and wait for opportunities. We just don't like to jump in there and trade. We have our levels. We have to wait for price action opportunities as well. And that only occurs when the market, gives us those opportunities, right? Well, we still have 83. We're still on the same bar, so we'll see what happens. It got up to 175 here. Let's try it. Try it for us. Very resilient market, right? Just, look, when they're resilient both ways. When it's bad, it's bad. But again, there's more opportunities on the downside than there is when the market's rally versus the market rallying. But you got to be patient and wait. And it teases you like that when it doesn't, goes right up to it and kind of bounces off. Again, maybe adjust it a little bit there if you're, depending on your risk tolerance. Okay. Well, maybe some of you are in here at 82. Nice little quick rotation there against the 82. Should have got filled there at 82 if you did leave it in there. All right. Nice little quick opportunity there against the 83 area. Again, we highly suggest you kind of scale in around an area because we're not going to be perfect. I wish I could tell you it was going to go to 82 and stop. That's not, didn't know it was going to do that, but that's why we scale in around an area. And again, patience is important, right? Waited for the area to get triggered, and then we take advantage of it when it gets there. I know the tendency is to want to like trade because you see the levels kind of bouncing around, but again, waiting for the good entry point gives you more leeway to manage those trades. You feel better about it. Again, if you're more aggressive, then you're in and then you're out, then you get back in again. The only thing about being aggressive is you want to overdo the our cost to doing business with giving all this money to the brokerage houses. I don't like the brokerage houses. I don't like to give them my money. I gave them enough money while I was trading, a lot. They don't trade as much as I used to, but still give them a lot. They annoy me. All right, nice rotation there against our 83 area here. Now we got up to 82.5 and rotate down. So again, very nice little area that's being stubborn. That's what we like. We like those stubborn areas. Obviously, now we have a number coming out here in about 4 minutes. So, if you're working this level here, then you're doing okay. Now, we did have the PCE numbers that came out, which is what the Fed looks at as far as inflation is concerned, consumption, and of the core PCE. They came in. The consumption came in less than expected, and the core PCE came in within line of forecast. So, kind of what the Fed looks at for inflation, kind of within line. All right, we do have a number going to come out here at the top of the hour in about 2 minutes. So if you still have a position against our 83, I look to, careful there and kind of be flat when the number comes out. All right, we're coming off our 83 area here, and we will let these numbers come out. Again, they could be some market movers. All right, this number is going to be released here momentarily. You can look at the ladder ticket there. You can see kind of they lighten up the load a little bit, 20s and 30s, and probably lightened it up a little bit more here, closer to the number here, but it's not too many 100 lots anymore in there. So you can always tell that something's up. There's a 200 lot there at 74. Bond market also lightened up the load a lot. So they're a little nervous. And we'll see here what these numbers produce. Okay. Little pop, little not. More of a pop. Next level of resistance we have is up at the 91 area on the upside. Again, like I keep saying, when these numbers are released, the algorithms kick in, and very hard for us as in traders, just normal traders, to be able to compete with these algorithms because they're just moving so fast. So there they go. They got down to 72, and then popped it back here at 75, and all in a blink of an eye. Almost impossible as a trader to try to match wits with these things. So no reason to try to fight it, just understand it, and wait for it to calm down a little bit. I mean, that's my theory. Some people love trading those numbers. Some people love just putting it on and hopefully kind of goes their way. There's all kinds of traders out there. They love the action. I, on the other hand, just want to make a little bit of money every day. Adds up at the end of the day, right? All right, again, upside resistance up at 91. That's our next level that we're going to focus in on. Downside support right now would be down around this 64.5 area, right around our pivot there at 63. All over the place, as you can see. Looking at the 91 area next. Wednesday and Thursday will be the Fed, yeah. So that's all. It's all exciting with the Fed. Hate the Fed. Hate F days. They don't do me any good. I lost a nice little bundle on F days when I used to be trading. I don't even know why I even waited for them. I'd go back like an idiot to go trade. We'd be dead all morning, and then let's wait till 1 o'clock because we're gonna go back for the Fed. So I'd hang around and wait all day, and then why did I just hang around all day and lose money? It was annoying. So I decided now I'm not trading F days anymore. I mean, you could trade F days. Like I said, you could trade these numbers too. I don't care. As long as you know what you're doing. I'm just trying to give you information to try to stay away from it because I've been there, done that. All right, nice. So you can see those algorithms. They rejected it. They came back and they said, let's buy it now. And now they're pushing the highs here. We're looking at the 91 area as our next area that we'll focus in on. It was hard to try to say that the market was going to go down to like, what is it, 72 or 73 here, and then pop back up. You don't know where it was going to go down to. If anything, I got support down at about the 67, 68 area right now. Okay, I will get. I'm going to repeat the levels here for people who, for Don, who wasn't here the last couple of days, so that he needs to catch up. So these are levels. I'm going to give you Wednesday's levels first. Let me see. Wednesday's levels were, pivot was, pivot was 39.89, 39.89, support 81, 73, 62, 53, 41. Our resistance on the upside 98, 40.06, 16, 24, and 33. And then yesterday, pivot 40.60. Yeah, 40.60. Support 48.37, 27. If I'm not mistaken, I think that was a low today. 18 and 07. Upside resistance was at 72, 83, 91, 4100, and 10. And you got today's, obviously, so I think you're all caught up. No problem, Don. All right, quickly, swiftly, coming up here. We have 91 as a little resistance, got right up to 90.5 here against our 91. See what it wants to do up here. Again, whatever you do or decide to do, make sure you keep your stops in place. Hitting some stops up here. All right, trading our 91 area here a little bit. Again, if you want to lighten the load a little, if you feel that you should or don't like the price action around it, then it's giving you that chance or make a little bit of money on it. But we're trying to rotate here a little bit, just trying. All right, there we go. Nice little rotation. I had to flirt with 93 on the upside there. Only 67 traded there. So if you had a finger stop, obviously if you had a mechanical stop, it got filled. But if you had a finger stop there, you maybe were teasing. They were teasing you a little bit. And that was if you just had a 2-point stop. Maybe you had a 3-point stop. You're getting paid off here. All right. So to get down to 89, hopefully maybe some of you took some profits there. That one was not as clear cut as some of the other trades we've been having, but hey, sometimes you got to work a little. You got to work a trade sometimes. You know, sometimes we have to manage it differently than other times. Every trade has its own uniqueness to it. Obviously, there's not one trade here that's going to be the same. Sometimes it's easy. Sometimes you got to work it. Sometimes you have to scratch it. I'll tell you a story. Some of the best trades I ever had were scratches. When you break even on a trade, just in case. All right. Well, we're kind of hanging up here around our 91 area. Got up to 375 there. And coming off here a little bit. Again, if you look at the chat, you'll see the levels that we gave out this morning. Those are the levels we use as a guide to the day. And we had the 91 area there as we got our third level of resistance up there. Had some nice rotations off of the other ones, depending on how you scaled in. And had a nice rotation against our 91 area here. This one we have to work a little bit more. Again, if anybody wants to ask any questions, ask in the chat. We are scalping the market and trying to just eke out some profits on trades. And then we'll look for the next opportunity when it presents itself.